What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. Let's go ahead and talk about some stocks and about what happened today in the markets. And the markets were nasty today, guys, with the Russell 2000 going down once again 1.42%. Nasdaq went down 1.39%. Dow Jones went down 0.89%. And the S&P 500 went down 0.91%. Apparently, guys, what gave rise to the sell-off that we saw today was what Mr. Boris Johnson said this morning about Omicron, about this new variant of COVID-19, Omicron. He said that there is a risk of having a tidal wave of Omicron in the United Kingdom, and the markets didn't like what he said at all. And that was the perfect excuse for us to have a red day all across the board. So today we had some sort of mix fears between the Federal Reserve. Remember that on Wednesday we have the Federal Open Market Committee, and once again Omicron fears. The markets are very nervous, guys, at this point, and anything is a perfect excuse for us to have a red day. So there is a lot of uncertainty out there. And take a look, guys, at the advances and declines distribution. So we had a broad red day today all across the board, not only on the indices. So today we had 2,400 stocks going up, and we had 5,000 stocks going down. And if we take a look at the percentage of most of the stocks that went down today, we had 2,500 stocks going down from 0 up to 2%, and we had 1,600 stocks going down from 2 up to 5%. We had a nasty day. And if we take a look at the sectors of the markets, the sectors today, guys, showed us that the markets are kind of dizzy. And why? Well, you guys know that on Wednesday at 2 p.m. Eastern Standard Time, we have the Federal Open Market Committee. There is a chance of Mr. Jerome Powell to say that they are going to speed up the tapering process because inflation is getting out of control. And what does that mean, guys? If Jerome Powell says that they are going to speed up the tapering process, that is going to imply that the very first interest rate hike is going to be carried out sooner than expected. The markets are expecting the first interest rate hike to be carried out in June. So if the tapering process ends, let's say in March, then immediately after that, the Federal Reserve is going to carry out the very first interest rate hike. And guess what, guys? The best performing sector today was real estate. This makes no sense at all. The real estate sector doesn't benefit at all from an economy with higher interest rates. And despite that fact, then real estate was the best performing sector today, followed by consumer staples, utilities, and healthcare, which I understand. Obviously, consumer staples, utilities, and healthcare are, for the most part, defensive sectors. So if the markets are, scared about something, then I understand that they go after these three sectors. But why the real estate sector was the leading sector today? Another aspect that doesn't make any sense unless we, let's say, point out that what Mr. Boris Johnson said this morning spooked the markets. So if the Federal Reserve is going to speed up the tapering process, the sector of the markets that would benefit the most from that situation would be the financial sector, which went down today 1.10%, and the 10-year Treasury yield, which you guys know that is an inflation indicator, went also down today 4%. So we can make the case that both the financial sector and the 10-year Treasury yield went down today because of Omicron fears, because of what Mr. Boris Johnson said, and so forth. So today we basically had a red day in the markets because the most two important sectors gave up today. So the tech sector, the most important sector of the markets by a long shot, went down today 1.50%, and the financial sector also went down today 1.10%. This is going to be this should be, let's say, a very volatile week, guys. Remember that on Wednesday we have the Federal Open Market Committee. That isn't going to be for the faint of heart. And remember that on Friday we have quadruple witching. We are going to have a massive expirations of options, of futures markets, of stocks, of indices as well. So this is going to be a tough week, most likely. And I think that, the reading that I am doing about today's trading session is that the markets are scared about a lot of things, Omicron, Federal Reserve, and at the same time they are a bit dizzy. Like, okay, let's go ahead today and buy real estate. When we have the Federal Reserve possibly on Wednesday letting us know that they are going to speed up the tapering process. So we are having a very tough December, guys. No doubt about it. And keep in mind, guys, that if we take a look, and this is something that I have been telling you guys left and right here on the channel, if we take a look at the Nasdaq 100 and if we take a look at the S&P 500, both indices are very close to all-time high, obviously. However, if we take a deeper look at those indices, we can make the case that we are going, as of now, through a silent crash in which most of the stocks out there are way off the highs. So get this, guys. As of now, the average stock inside the Nasdaq is 39% of the highs. Obviously, the Nasdaq is a cap-weighted index, and obviously the handful of stocks that have been doing the heavy lifting are the ones that are letting the Nasdaq and the Nasdaq 100 to be near all-time high, and the same situation applies for the S&P 500. But most of the stocks out there are way off the highs. We are seeing massive pain all across the board. And now the question is the following, guys. Let's say that the tech sector goes into a correction, okay? XLK, which went down today 1.50%. So if the tech sector goes into a correction, and since the rest of the markets are already in correction territory, so are we going to see a rotation into most of the stocks that have gotten killed recently, or are the rest of the markets going to go lower along with the tech sector? That's a question that is a bit concerning. If you ask me, I would say that we might see a rotation. That's the key word. We might see a rotation if the tech sector happens to go down into, most of the heavily beaten down stocks that we have out there as of now. And before going over the indices, I want to show you guys some trades that I closed in today's trading session. And the first one was a loss, guys. I had to apply a stop loss on Robinhood markets. I tried to guess the bottom. It didn't work out. And you guys know that I am 100% honest here with you. So on Friday, I purchased 200 shares of Hood at $20.04, paying $4,007. And today I had to cut the loss, guys, because Robinhood was looking very, but very ugly. I was thinking about, an oversold trade, because Robinhood was very oversold on Friday, but that didn't matter, guys. It just kept on going down today. So I ended up selling out of my 200 shares at $19.31, and I was paid $3,862. I ended up assuming a loss of $145. However, I also took some other trades that ended up being successful so far. So I sold a put option, guys, of AMC today that expires on February 18. This is the 23 back put, and I was paid $490. I believe that AMC is going to be above 23 bucks by February 18. And if I happened to be assigned those 100 shares, then I am going to be averaged down my current position on AMC. And I don't think that momentum is gone in the case of AMC. So I don't really, and on top of that, guys, the call options, when you sell covered calls of AMC, the implied volatility is very high. So that ends up being, you end up being paid a nice premium. I already own 200 shares. So if I happen to be assigned shares at $23, I am going to be able to sell more covered calls. So I don't mind being assigned at $23, but I believe that AMC might be above $23 on February 18 of next year. Another trade that I opened today was on DraftKings, guys. Let me show you. I have been selling covered calls on my losing positions left and right. So in the case of DraftKings, in this case, I bought back a covered call that I had sold, and I exited this trade making a profit. So on December 8th, I sold the $45 call that expires on February 18, and I was paid way back then. I sold 5 contracts, by the way, guys. I was paid $570, and today I bought back those 5 covered calls, and I paid $325. I ended up locking in a profit over here of $245, and I also sold a covered call on Lucid Motors. So let me show you. Over here I own 100 shares at an average cost of $48. By the way, Lucid, it was announced today that now Lucid is going to be in the Nasdaq 100. It's going to be listed in the Nasdaq 100, I think that on Friday or maybe next Monday. I don't remember exactly. So I sold this covered call, guys. I sold the $50 call that expires on February 18, and I was paid $388. So I ended up making $388 selling this covered call and Lucid. I also made $245 buying back the 5 covered calls that I had sold on DraftKings, and I also made $490 selling a put on AMC Entertainment. So I ended up making today $978 already, subtracting out the loss that I had to assume in the case of Robinhood, which is a trade that didn't work out. Okay, S&P 500 goes down today 0.91%. And by the way, guys, if you are selling covered calls, you have to take advantage of the volatility of the markets. Whenever you sell a covered call and the markets go down, and obviously the price of any stock that you sold a covered call on goes down, then the value, the premium of that covered call, of that call that you sold, goes down as well. So you can buy back a covered call that you sold, paying a lesser amount of money relative to the premium that you were credited when you sold that covered call. So in days of volatility in the markets, I am, buying back the covered calls that I have sold, and I have been making good money doing so. So yeah, that strategy is working out as of now for me. So in the case of the S&P 500, it went down today 0.91%, and it closed today's trading session at 4,668 points. I am going to pull up here the 5-day 15-minute chart and take a look, guys, at how the bulls have been able to defend tooth and nail 4670. It acted as lower support today. It was broken to the downside slightly, before the closing bell, but we can make the case that it acted as lower support today. 4670. It also acted as lower support on Friday. It also acted as lower support on Thursday, and lastly, it acted as lower support on Tuesday of last week. So I'm thinking, guys, that as long as the bulls remain trading above 4670, then what we are seeing over here is some sort of consolidation process slightly above this level. And mind you, if 4670 happens to be broken to the downside, we have a huge leg down to fill, guys, down to 4610, which happens to be a former area of resistance back from December 6th. So watch out for this support tomorrow, guys, 4670. If tech keeps on taking a hit tomorrow, then don't be surprised if we happen to see a huge leg down to 46.10. And in terms of overhead resistance, once again, the most important area that the bulls are going to have to take out is going to be 4,700. And if we take a look at the NDX, the Nasdaq 100, let's see what happens over here. Let me pull up the 4-hour chart. And in the case of the NDX, it went down today 1.53%, and it closed today's trading session at 16,082 points. So we broke the support of 16,150 points. So in terms of support for tomorrow, the most important area is going to be 16,000 points. We are talking about a former area of support back from late November and also back from mid-November. If 16,000 points happens to be broken to the downside, watch out for the tech sector tomorrow, guys. Then the next foreseeable area of lower support is going to be this 180 SMA at the 4-hour chart at 15,650 points. This would be a nice leg down that the bears would enjoy, no doubt about it. And in terms of overhead resistance, I am going to be looking at 16,300 points, which happens to be a former area of support back from mid-November and also back from early November. So in strict technical terms, there's nothing wrong with either the S&P 500 and the Nasdaq 100. We are still on a clear uptrend, trading between the moving averages in the case of the NDX. So let's see what happens, guys. We're going to have a very volatile week. Friday is going to be a tough day as well. We know that market makers are going to try to shake off as many markets participants as they can, making the indices to go up and down in very wild swings, because we're going to have a massive amount of options expiring on Friday. So this is going to be a tough week, most likely. And now, and talking about tough things, let's go ahead and take a look at Amc Entertainment, guys. And where are the apes at? What is going on over here? So AMC went down today 15%, and it closed today's trading session at $23.24. We can make the case, guys, if we want to see things glass half full, that AMC has been affected by Omicron fears. Something that caught my eye is that when we had the Delta variant fears, coming out, and all the, and most people freaking out about that variant of COVID-19, AMC wasn't affected by that, and now it is being very affected. So, and as I said, if we want to see things glass half full, we can make the case that the apes are going to rescue AMC eventually, and that AMC is going down, because obviously this is a movie theater chain, and this might be a company that would be very affected if this new variant of COVID-19 happens to get out of control. So obviously, guys, this isn't looking any good. The most important task for the apes of AMC would be reconquering $28, which happens to be a former area of support back from early August. And mind you, guys, if AMC keeps on dropping, the next important area of support, we can make the case, is going to be $16, guys. We are looking at a former area of resistance back from May 25th and also back from May 17th. So as of now, AMC is very oversold. We can see the relative strength index at 24 points. It is very, very oversold. So I don't see AMC going straight up, or straight down rather, to $16. I think that AMC is due for a relief rally. And if I zoom in here on the 4-hour chart, then the very first area of resistance that the bulls need to reconquer would be $26, which acted as lower support on Friday. And after they were able to reconquer $26, then they need to make another push higher and try to reconquer $28. So obviously, guys, AMC doesn't look any good. I sold a put today with a strike price of $23. And I think that momentum isn't gone. And we might see, I think that we are very likely to see, that's my opinion. I could be mistaken, obviously. I have been mistaken before. But I think that we are very likely to see AMC Entertainment once again at least above $28 sooner rather than later. And now let's go ahead and take a look at the second stock of this video, which is going to be Tesla. I got a lot of questions today about Tesla. You guys know that I own 120 shares. I didn't want to sell because I bought back a covered call that I sold last week. And I always sell covered calls when Tesla goes up, guys. I never sell covered calls when Tesla goes down because that lets me perceive better premiums, obviously, right? So I am going to zoom in here on the 4-hour chart. And clearly, guys, Tesla has been under pressure because this was a classic case of buy the rumor, sell the news, obviously. So, and I told you plenty of times, I think that it is very unlikely Tesla to announce another stock split. I think that is a possibility that I told you guys that was a possibility that we could pretty much rule out. But many people believed in that case that Tesla was going to commit the insanity of carrying out another stock split when the stock has had a phenomenal run up in the most recent months. So that didn't end up happening, and now we have people selling the news. Buy the rumor, sell the news. So I'm thinking, guys, that because Tesla went down today 4.98% and it closed today's trading session at $966.41. So Tesla held today like clockwork $950. This is no way coincidence, guys. We are talking about a former area of support back from June 6th. So if Tesla happens to break this support, the next important area of support is going to be at $905, which happens to be a former area of resistance back from October 21st and also a former all-time high back from February of this year. So if Tesla happens to hold $950 as lower support, I think that this might be an interesting spot in order to start a trade on Tesla, because if so, I think that the bulls of Tesla might be able to fill the next gap up to $995, which happens to be a former area of support back from mid-November, also back from November 10th, and lastly, back from late October. So from $950, guys, up to $995, we are looking at a trade that will leave us a profit of almost 4%, a very nice profit. And on the flip side, if this support of $950 happens to be broken to the downside, and Tesla happens to find support at $905, then from $905 up to $950, we are looking at a 5% profit. And if we take a look at the relative strength index of Tesla, it is at 30 points, very low. We have seen Tesla before trading with its relative strength index lower than this at 26, 20 points. So I don't think that Tesla is going to drop down further than $905. So watch out for either Tesla consolidating slightly above $950 or maybe paying a visit down to $905, finding a good support over there, and then bouncing back up. And the third stock of this video is going to be Coinbase, guys. And oh boy, is the crypto space looking ugly? It is, guys. So I think that Bitcoin broke the support of 48,000 bucks this afternoon. And what is going on in the case of Bitcoin, guys? Let me go ahead and take a look over here. So it is trading at 46,000. So 46,000 is trying to act as a new support. And in the case of Coinbase, you guys know that Coinbase is pretty much a Bitcoin related stock. Coinbase does, for the most part, whatever Bitcoin does. So Coinbase has been under a lot of pressure. It went down today 1.72%, and it closed today's trading session at $251.37. We can make the case here, guys, on the 4-hour chart. Take a look. Let me zoom in here. We can make the case that Coinbase is making a double bottom formation right at $244. So I'm thinking, guys, that if Bitcoin can burst above $50,000, let me pull up Bitcoin once again over here. As of now, we are trading at $46,680. So I'm thinking that if Bitcoin can take on $50,000 and if it can fill the next gap up to $53,300 each, which is going to be the next important area of overhead resistance once Bitcoin has been able to burst above $50,000. We are talking about a former area of support back from late November. So I'm thinking that if Bitcoin can make this move to the upside, this push to the upside, then I think that Coinbase could do the same, guys, by bursting above $261, which happens to be a former area of resistance back from mid-October and also back from late June. And if so, then Coinbase can fill its next gap up to $287, which happens to be as well a former area of resistance back from back from early September and also back from early August. So if we were able to take a trade on Coinbase, guys, once we confirmed that this stock was able to burst above $260, let's say that we pick up some shares at $262, and if we write them up to $288, we are looking at a 8% profit. This is nothing to sneeze at. So we need to keep a close watch on both, guys. Bitcoin bursting above $50,000. And if that were to happen, I think that we are very likely to see Coinbase filling the gap from $260 up to $285 per share. And now let's go ahead and take a look at the very last stock of this video, Nvidia, which got absolutely crushed today, going down 6.75% and closing today's trading session at $281.61. And basically, guys, as I told you in the introduction of this video, the tech sector did very poorly today, and SMH, the ETF that tracks the semiconductor industry, had a very tough day. I think that it went down 2%. And obviously, Nvidia couldn't be the exception to the rule. Most of the semiconductor stocks out there got absolutely crushed today. So I am going to zoom in here on the 4-hour chart. And the fact that the bulls couldn't hold this 180 SMA on the 4-hour chart is a very bad sign. Nvidia isn't looking any good from a technical standpoint. And if we take a look at the relative strength index, Nvidia already entered into oversold territory. We can see the RSI at 29 points. So we can also make the case that Nvidia is due as of now for a relief rally. Believe it or not, one of the hottest stocks of the stock market throughout this year. So I'm thinking, guys, that if we happen to see a relief rally, and if I see Nvidia taking on this 180 SMA on the 4-hour chart at $293, then this might be a sign that the bulls are going to be able to fill the next gap up to $304, which happens to be a former area of resistance in which the bulls of Nvidia failed on multiple occasions during the course of November. So if we were able to take a trade on Nvidia from, let's say, $295 up to $304 each, we are looking at a 3% profit. So don't sleep on Nvidia, guys. Obviously, I am not going to touch Nvidia below this 180 SMA. As of now, the stock of this company looks pretty bad. And if the tech sector happens to keep on going down as it did today, then Nvidia is very likely to lead the way down along with the tech sector. So I need to see it reversing this downtrend that we can see over here on the 4-hour chart and taking on this 180 SMA on the 4-hour chart. And with Nvidia, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours after the market closes. Peace out.